Hello and welcome to Premier Study in Investing. It's great to have you. Thanks for stopping by.
In this weekend update, I'm going to be looking at the collision between the chip shortage that we've looked at recently. If you did not see that video, I had a nice request of information from the chip manufacturers in the United States by the U.S. federal government, as well as a report from Deloitte saying that we should expect chip problems throughout 2022. This first company that we're going to be looking at is ACM Research. You can see it here on the screen. These are nice gains here and here. But then as you can see, we had this big down leg, and the reason is because this is one of the companies that was put on a quote-unquote restricted list by the SEC requiring further audits and more reliable financial information. If you're feeling more bearish and you think, well, maybe I don't want to buy puts on the S&P 500, maybe you'd be more interested in buying this product. It's the Direction Daily FTSE China Bear 3X, so it's a inverse leveraged ETF. So I bought this at 21 here, more because I thought that the whole idea of locking down your entire country and having a zero COVID policy was fairly unrealistic. I'm not really that impressed with, like many people, I'm not really that impressed with the communist business model, but I really thought that some of the things that the way they're handling COVID is going to hurt their economy on top of the Evergrande situation and all of that. So from 21 up to 36, it was up something like 76% in, 10 days. So kind of got lucky on that one. But so if we look at the top 10 holdings on the yin yang, the yang is the bear. You can see it here, Tencent, Alibaba, China Construction Bank, JD.com, some of these other ones I'm going to try not to say. But mostly consumer, discretionary, financials, and communication services. It says the FTSE China 50 index consists of the 50 largest and most public Chinese companies currently trading on the Hong Kong Stock Exchange, as determined by the FTSE Russell. Okay, so if you want to get more into that, you can learn more about that index and its 50 companies. Going back to ACMR, the SEC published its first provisional list of issuers identified under the HFCAA. ACM was identified on the SEC's provisional list after ACM filed its annual report form on the K10 on the financial year ended December 31st, 2021, which includes an audit report issued by the public accounting firm that the PCAOB is unable to inspect because of regulations in China. So, yeah. Then it goes on, ACM appears relatively early on the SEC's provisional list after the filing of its annual report on Form 10-K, March 1, 2022. ACM anticipates additional companies with relatively later filing schedules will appear on subsequent provisional lists as those companies file their respective annual reports. ACM's appearance on the provisional list does not mean ACM will be listed soon or at all, according to SEC guidelines. The earliest trading prohibition could be invoked is 2024, once an issuer has appeared on the SEC's provisional list for 3 consecutive years, 2022, 2023, and 2024. Moreover, it says ACM is implementing plans to identify and appoint an independent public accounting firm that is subject to inspection by the PCAOB in order that in the future AMC will no longer appear on the SEC's provisional lists and will no longer be subject to the related delisting guidelines. ACM already begun to interview potential U.S. auditors to comply with the guidelines, said David Wang, President and CEO of AMC. As we announced on December 7th, 2021, we are confident in our ability to meet the SEC requirements in advance of the 2024 deadline, and we remain committed to our NASDAQ listing status. So this could probably apply for a lot of companies that you may be looking at, and one way to play it is just say, I'm not touching this with a 10-foot pole, I'm having nothing to do with this. It's very possible, I don't want to say very possible, there's always a possibility that the current situation, according to the SEC guidelines, could change, right? That's certainly a possibility. But it is good that they've taken some steps. We'll look at the end at some of their financial statements, but if the audit is in question, then the financial reports are on shaky ground. And so some of the great numbers that we see on their earnings may not be all that reliable. At least you could see some could argue it that way. However, there is an interesting twist. ACM Research announces a 3-for-1 stock split effective in form of a stock dividend. It says each shareholder of record at the close of business on March 16th. So that's, what is that? So that would be the end of the trading day this coming Wednesday, so March 16th, will receive a dividend of 2 additional shares of Class A common stock for each then held share of Class A common stock and 2 additional shares of Class B common stock for then held a share of Class B common stock. These will be distributed at the end of the trading day on March 23rd. I am in the CFA program, but I don't see any large benefit from buying now and then getting the 2 free shares versus just waiting until, say, Thursday, the 17th, the day after the split, and then just buying the shares then. Of course, we can look at their 2021 performance. And they are out of Fremont, California, which is where their U.S. offices are headquartered, but they have other offices in China. So this is the 3-month and this is the year ended. So let's just look at the year. So let's go with GAAP. And 44% on the gross margin, 44% again on the gross margin. So that was about the same, but the revenue really increased significantly, 156,000 to 259,000, meaning that income from operations went from 21.5 to 38.7. So it's a pretty large jump. EPS went from $1.03 to $1.96. So that's something almost 100% jump in EPS year over year. Of course, you can find out more about them, but I'll just show you really quick while we're here. They do a lot of cleaning technologies, and I'm not really that familiar about wafers. I basically am aware that we have a problem on the manufacturing side, that a lot of those are made in Taiwan, that we have increasing issues, especially if China gets drawn into this thing through Russia, and as the U.S. is saying to China, hey, you can't have your companies assisting Russia in sidestepping our sanctions. So I don't know, but coating systems, developer systems, wet stripping, wet etching, scrubber systems, electroplating systems, stress-free polishing systems. And so it's not a really huge company. What's the market cap here? It's 1.1 billion. More trading the volatility and thinking that it has a better than average chance of improving in the stock price due to their increases in EPS. But with this whole new thing going on with the problems with the SEC, it may just be too risky. Again, any benefit of buying before the split as far as after? I don't think there is. If I'm wrong, let me know. All right, that's what I have for this weekend update. Thank you.